Hey everyone, welcome back to another video. Today's topic is, should I trade the breakout that's happening right now? And what does that mean? That means you have a stock that is on an intraday basis breaking through a significant level of resistance on the stock's daily chart. So that could be a simple moving average like the SMA 200. It could be whatever, some sort of longer term level of resistance, and you're looking at the stock and wondering, do I go long right now? Well, I'll flat out say that no. Just because you see the breakout happening, and let's say you got an alert that the price for that resistance level was just hit, does not mean you go long right away. You have to take in the context of everything, which is the market, the stock, etc. So before we dive right into it, just want to briefly talk about the market. Market has had a ginormous run since the end of October. We have been more or less just in a trading range, not really going anywhere. That does not make me bearish at all. I am still very bullish. I think that the market is just digesting these gains, and at some point soon, especially with earnings coming up, I'm willing to bet that the market is going to challenge the high here and try to break out above it. How would I know to get bearish? Well, if you see stacked red candles happening back to back, meaning you have something like this where it's consecutive long red candles closing, okay, that would temper my bullishness for sure. But until I see something like that, I'm not going to assume that there's suddenly going to be a top, because there's nothing in this price action that suggests that. So, like I said, I view this as a pause, and that at some point we're probably going to test this high soon. Okay, let's go to the topic of the video, which is, how do I know if the D1 breakout is real? Now, first things first, when we're looking for stocks, we're looking for three major components to it. We want a stock with relative strength, heavy volume, and a technical breakout. You need those three for the trade, at a minimum, to be considered an A+ setup. And an A+ setup is a stock where anyone can look at that chart and say, oh yeah, that's a nice breakout. That's a great stock to go long on right now. And when you don't have those three components, or you have like 2.5 of those components, like let's say you have relative strength and the technical breakup, but you don't have the volume, that automatically is going to make it less of an A+ trade, aka not an A+ trade. Why? Well, if you didn't have volume, for instance, that tells you that, well, these buyers, sure, the stock is floating up to this resistance level, and right now it's poking above it, but whoever's buying this is not super aggressive, right? Because if they were, like in the case of CRM, for example, right? You had this pullback, here was the high here, you had a pullback here, and then a long green candle off of this higher low, right? Here's a low after earnings, low, that's higher, low, that's higher, right? All of these gains here were digested, they held, and buyers, before the stock could even go down to the first level of support here, said, I want in. And then the stock moved up on heavy volume. You see this blue line while it's hugging these bars? That means it's heavy. If it's below the bars, that means it's light. So we have heavy volume, we have decent price action to the upside, nothing super aggressive, but nice gains on the long side, and relative strength. Okay, that's nice. Do I go long right when I get that alert? No. You still have to wait, and you have to ask yourself, what's the market doing today? Is the market strong? Meaning, is the market moving up on decent volume to the upside? Is it chopping around, not really going anywhere? Is it declining, right? You have to ask these things, because market first, the market drives our trading decisions. Then you have to ask yourself, on a longer term basis for CRM, right? What is the stock doing, right? How did it approach this level of resistance? When you play patty cake with the resistance level, like just look at this price action right here. Let's say you go up to this resistance level and you're seeing shit like this, and then the stock tries to break out, you need to be on high alert, because that does not mean buy. Why? Well, if you were not playing patty cake, you would have immediate follow through, right? You would have this long green candle here, okay, maybe a doji or whatever, and then you would see follow through that breakout level. And that would tell you that buyers are aggressive. But when you're playing patty cake like this, or the price action is just kind of wimpy, there's not really a whole lot of relative strength, there's low volume, you automatically need to be very cautious. However, with CRM, that wasn't necessarily the case, right? We basically had the three components we were looking for. Okay, still, when you get that alert intraday, you need to see the stock have follow through on an intraday basis. That means that once you get that alert and you go to the 5-minute chart, you want to see long green candle, adding to those gains immediately, or at the very least, a small pause that lasts for no more than 5 or 10 minutes at most, and then a long green candle moving up, 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 stacked on top of each other, because that tells you that buyers are aggressive. Okay, so let's say you have that. Do you go long? You still want to be careful, especially if you are unsure or you're lacking like confidence and you're not entirely sure of, well, the market's kind of just chopping around. It's not like a super bullish trend day or anything like that. Because if you don't have a market tailwind, automatically that means that the stock is going to have to do all the work itself. If you have the market tailwind, and let's say this was happening on a bullish trend day, which I can tell you right now it wasn't, then you need to be more cautious because it's going to be harder for that breakout to sustain itself and have escape velocity through it, because resistance levels are resistance levels. What does that mean? It's resistance. It means that it's a certain point for the stock price that it's going to have a hard time getting through. You need to operate under the assumption that resistance is always going to hold, unless you are convinced otherwise. And that convinced otherwise will come from the price action and how aggressive the breakout is, what is the market doing, etc. So just by assuming that you get this alert because it's starting to break out, operate on the assumption that it's not going to hold, because that will temper your excitement on it. If you can truly tell yourself that this breakout is going to struggle and you can get yourself to watch, that's good. Don't give into the FOMO and start rushing in. At the very least, wait to see the stock pull back a little bit, because you want to see if there are buyers who are starting to take profit, right? Is that selling pressure going to pick up? Are we just going to drop right through this level here and then all of a sudden by the end of the day this breakout here wasn't actually sustained and now the stock is closed below? Because if that happens, then guess what? You're stuck in the trade. Or maybe what you should do is probably take that loss and try to figure out what your mistake was so that you don't repeat that again. Were there clues in the price action on the stock, right? Was the move up wimpy with mixed overlapping candles and light volume? Was the selling very aggressive? Was the market not providing you a tailwind? These are all really important pieces of context that you have to have the answer to, because that's, when you put it all together, going to tell you if this breakout can sustain itself, if it can have follow through. The more conservative approach, which I am leaning towards, I think this is the right thing to do, is just wait to see, especially if the market is not super strong that day. Just see if the stock closes above the high or the breakout point. If it does, okay, that's nice. Should you swing it? Well, maybe. If the stock and the market are both really strong, perhaps. But even then, that is still not the highest probability trade. Just like the 5-minute chart, you need to see that follow through. You don't want to see mixed overlapping candles with nothing happening and then all of a sudden the breakout fails, right? You want to see this continued aggression on the part of buyers. Now, in the case of CRM, right, the next day, stock opened on where this previously closed, pushed up, and it pulled back. And I can tell you right now that the stock hasn't really been able to go anywhere because the market has been weak. But if you look at the daily chart, it has been able to close consecutively for several days now above this breakout point, right? How do I know that? Well, just look at where the stock closed, right? Market down, down, down. What did the stock do? Today, the stock was actually below this breakout point intraday. If you came in and you were long CRM on this breakout and you are shitting your pants so scared because, oh my God, look, the market's falling apart and this stock is now below the breakout point and you sold at the low of the day, guess what? You're probably kicking yourself now for not waiting for the candle on the daily chart to close. You need to wait for the candle to close, especially on a stock that you are long for an overnight or on a swing basis because you don't know what's going to happen. And just like the 5-minute chart, you have to wait for the candle to close before you know its true nature, right? And guess what? It had that dip to start with the market, right? Does this look like scary price action? Sure it does, but guess what? This is not super, super strong. And how do I know that? Well, this is light volume and it's more or less just following the market. And then the market started to, I don't know, try to find a little bit of support and it started to kind of just have a choppy grind higher. But look, CRM went up with it. And then when the market started dipping again and it broke the previous low of the day, what did CRM do? It did nothing, or it just chopped around. And you can see that, right? Market, by the way, sorry, this little overlay here, this gray line or whatever, that's the SPY. The candles here are for the CRM chart, right? But this was the tell intraday that this stock has buyers that are legitimate, that are at that breakout level. Because if buyers truly did not like this breakout level, you would not see this stock hold its gains like this while the market is making new lows, right? Once the market found support, guess what happened? This stock lifted off and it closed right up at the prior day's high. And that's how you get this nice bullish hammer that forms. Okay, what does that tell you? That tells you that while the market has been weak, this stock has been able to hold its gains above the breakout. That's excellent. This is a stock that is strong because if buyers truly did not care, this breakout would have easily failed. But that's not what happened. So CRM's breakout is awesome. And it more or less has, to me, completely confirmed that, yeah, this breakout is legit. If the market finds a bid and support and starts to move up, CRM's going to be leading the charge with it because buyers are clearly interested inside right now on this little market pullback that's happened the last couple of days. But again, you wouldn't know that had you bought right away while this breakout was happening intraday. So what I'm trying to say here is for these breakouts that are happening intraday, unless you are super confident and you are consistently profitable and you feel like I can do this, just hold off. Just wait till the next day. Wait to see how this closes and then see the next day if the price action is moving higher. And if the market is supportive and the stock still looks good and it's moving up, all right, that's nice. You at least have more conviction now that the breakout held, the stock did not gap down and is falling below, or it's not giving up all these gains immediately, it's adding to it. At least then you can feel more comfortable. And still, it still wouldn't be as nice as seeing, more follow through, or like here we had this retest of support and then the stock closed above. That's awesome. Okay, so hopefully that's sort of easy to comprehend. I'm sorry if that was kind of a lot that I just threw out there, but it should at least be apparent that you cannot just run in and buy a breakout because you have to make sure that the breakout is real. And there's a lot of small pieces of context that go into it. So let's look at an example of a breakout that looked good intraday and then ended up not being so great. And that is IoT. Now, I actually took this trade yesterday and it was not a good trade. It was not at all. And the reasons for that, well, there's a lot of them, but just like we were talking about on CRM, right? This was yesterday's candle. You can see that at some point it was all the way up here, right? Meaning, oh man, look at this breakout above AVWAP. This is great. The stock is strong, right? It's got good volume. Well, I went long at around the 34.14 level and I stepped away towards the end of the day and I got my ass handed to me. And I was stupid in that I was assuming that this breakout was going to hold, which number one is a terrible idea because look at the historical price action. What has the stock done since it first tried to break out above AVWAP on the daily chart? It's chopped around. It has not been able to get that escape velocity it needs to actually have a sustained breakout, right? This right here is a clue. As I said, resistance is likely to hold, and you should assume that's the case. And that's not what I did yesterday. And I also assumed, and was silly in that I wasn't at my computer when the market closed, and I ended up holding this overnight. And guess what? Big gap down today on the stock. And well, the market was down, but guess what? What does all this mean? This means that this breakout failed. And my mistake was, on top of just poor management and walking away, I should have looked at this and this choppiness here and seen that it struggled to have a sustained breakout above AVWAP-E, especially while the market was moving higher in early December, right? You can see the relative weakness here. And then, on top of that, was yesterday the most bullish day in the market? Absolutely not. Let's go look at the 5-minute chart. What does this look like to you? To me, this just looks like noise. Down, up, down, up, down, up, down, up. Lower highs, low volume, no direction whatsoever. So this is not a bullish trend day, meaning that the stock does not have the tailwind it needs to blow through this. And I paid the price for it. It was a bad trade. And even if the stock closed above this AVWAP line, what does that mean? Does that mean my trade was good? No, it still wouldn't have been good. And why is that? Because guess what? Look at all these other times the stock closed above AVWAP. It never had sustained follow through. So it wouldn't be wise to see or assume that that's going to happen here. So I should have never taken that trade for a lot of reasons. And that was a mistake. It was just a bad trade. And I am always working to have less of these bad trades. And that's why it's so important to go over your trades that you make in your trading journal, because you'll be able to identify these mistakes, learn from them, so that you don't take subpar trades and you improve your trading, right? It's an entire process trying to improve. Now, let's say you're looking at IoT and you're wondering, well, when would you go long if you're looking at it right now? Well, if I were to go long IoT, I would want to see sustained follow through on a breakout above AVWAP-E, meaning if you look at how many times it's tried to break out, right? I would want to see at least a few days of nice consecutive green price action to the upside on heavy volume. That would make me feel more comfortable. Even then, right, depending on where the stock is, you still have all this level of resistance here. So it still would not really be a high probability trade. And again, this historical patty cake price action where it's not really going anywhere around this resistance level would be a further turnoff. So I'm a better trader today because I will be much more cautious with a trade like this in the future. And again, I was day trading under the assumption that, well, look at this breakout. The stock has nice bullish price action today. It broke out, support held at VWAP, right? Higher low, and then, well, towards the end of the day, it actually closed below VWAP, and then, yeah, nasty gap down today. Okay, let's take a look at a couple of other failed breakouts, because again, I want to get the point across that the best trades will already be, or will already have that breakout, meaning the breakout has happened, you have some kind of follow through or confirmation of support. So let's take a look at, sorry, not Meta, I want to look at CB. So CB, here's a nice looking chart, right? Stock has had relative strength, right? Volume has been more or less decent. It's a choppy stock, sure, but I set an alert at the high of the day here. And I got the alert today. Why? Because, well, the stock was breaking through all these levels of resistance, right? All these lines here, these are automatically drawn trend lines by the Option Stalker Pro platform. And what that basically means is when you have a bunch of these trend lines here, I call it a congestion area of convergence of all these lines of resistance. And that should right away tell you that this is going to be a hard area to break out through. And again, assume resistance will hold. And because I paid the price and learned yesterday of my mistake with IoT, when I got this alert, I said, no, I am not going long on this. It looks nice, but number one, I don't have the market tailwind at my back because we had a big gap down. It was a choppy move to the upside. We pulled back, tested the low, made a new low of the day, right? This is not aggressive buying on the side of buyers. And guess what? Let's say you went long CB up here, or maybe up here because you foolishly assumed, well, hey, look, it closed below VWAP and now we have a close here. Well, number one, you didn't wait for the follow through. And number two, you weren't looking at what the market was doing, which at that time, sure, it was starting to, or it was continuing to climb, but look at this, it's already losing its relative strength. It closed once above and then immediate bearish engulfing candle, and then it just sold off the rest of the day. If you made the same mistake I did yesterday of, hey, this stock is breaking out today, it looks great, and you don't have the market tailwind and you bought, you got your ass handed to you, because guess what? It closed nowhere near this resistance level. In fact, this is a bearish hammer. Okay, so that's a failed breakout. And the clues, there were a lot of them. There was one, well, look at the stock, it's kind of choppy, right? The volume isn't amazing. This move up to the resistance level has been patty cake, so to speak. You can see a couple levels or a couple of touches here where it failed to get above. Okay, that should raise some more warning flags. And you don't have the market tailwind today. The market is weak. So don't go crazy on Chubb Limited Financial. Just wait for that follow through. So ideally, what I would have done in this case, and what I did was, well, I didn't trade it, but I would have loved to see it close above the resistance level and then tomorrow get some more follow through. And especially if you had a market tailwind, sure, then it could have been good. But guess what? That's fantasy. That's not what happened. This was a failed breakout. And those who got long here, well, they got trapped. And that sucks. Let's take a look at another example of a failed breakout. WM, I think, was the stock. Okay, sure. Now, this longer term, this stock has been in a bullish uptrend along with the market. That's nice. Stock does have relative strength. It doesn't really have a whole lot of volume. Relative volume is, well, not really high at all. So right away, you're already missing the heavy volume component. And guess what? The price action isn't super aggressive either. Like, yes, it's been in a kind of a grind higher, but you don't have like stacked candles going into this level of resistance here. And this level of resistance is the high. I don't know if this is the all-time high, but whatever the case, it's resistance, right? Because you can see high here, tried to break through it, couldn't add to those gains, tried to break through it, couldn't add, tried today, and then it sold off. And why do you think that happened? Well, it was probably because, well, the market was weak too, right? Let's say you bought here on this bounce off of VWAP. And what level is that? 182. Let me go back to the daily chart. 182, yeah, that's above the high. So let's say you bought here and you're like, hey, buyers came in, and before it could even get down to that 181 level or whatever it was where that previous high of the year was, buyers got in and were aggressive and started buying it right away. I like this. Support off VWAP. This stock is going to keep going, and I just bought a great breakout trade. I was patient. I waited for that pullback, and now that patience is paying off. Well, guess what? Stock sold off, and it sold off below that prior high that was on the daily chart. And what were the clues? Well, first of all, if you look at the stock on the 5-minute chart, this pullback here, it's not the most aggressive in the world, meaning that you didn't give back all these gains, right? You held VWAP, but this is still decent selling pressure, right? This is a long bearish engulfing candle followed by another long bearish engulfing candle stacked on top, all on heavy volume. So instead, let's say you saw a wimpy pullback, something like, let's say it pulled back to VWAP with price action like this, that's like mixed green and red candles. Well, that would mean that the profit taking is not very intense, and you might be able to have like more conviction that, yeah, buyers are still in here, because if sellers were super aggressive, you'd see price action like this, not this wimpy little move down. So your first clue was the pullback was kind of aggressive to some degree. The second clue was that this bounce off of VWAP certainly was not aggressive. And how do you know, right? Well, how would you have known, first of all, if you bought here on this pullback? Well, you wouldn't have known because you bought right here, right? But even then, you see the stock, although it paused at VWAP, it's trying to go above and sellers are pushing it down. You have a wick above the candle. Wick, wick. Those are sellers pushing it down, right? Buyers had the price up here at some point, and sellers said, no, no, no. Well, you still buy it here. It's trying to go through, starts compressing again. These are your warning signs. These are tiny bodied, wimpy candles that look nothing like this move here. And most importantly, what is the market doing? The market is wimpy. It's weak. It's not going anywhere. It's down 1% for the day. Guess what happens when the market rolls over? It drags this thing with it down. And when the market found support, what happened? Did this go up? No, it did not. And had you gone long, well, it probably would have screwed you. And you might be trapped. Now, you could argue that, well, this is a bullish daily chart. I like this. It's holding the gains near the high. And sure, you could argue that. But the point I wanted to get across is that when you see a breakout happening intraday, unless you have all of the things in the world going for it, meaning the market is strong, the stock price action up to that breakout level has been really strong with high conviction, meaning relative strength, heavy volume, organized buying, right? Just hold off on that trade and wait. If it closes above that level of resistance, that's great. That tells you that buyers are interested and that sellers weren't able to get it back below that resistance level. That's going to be a stock you want to watch the next day because, well, if it had closed above, then the next day, if it opens where it closed or it gaps up, that's great. You have a nice breakout that at least now you know that the breakout yesterday, those gains are being added to now. That's awesome. But of course, well, in the case of waste management today or WM, that's not what happened. So anyways, I am kind of probably dragging this out longer and longer, but the point I want to get across is that I think for A plus trades, which I think for all intents and purposes, we should always be trying to trade A plus trades, no matter your level of experience. Obviously, if you are a professional trader, you can tell me to shut the fuck up and I can trade whatever I want. And you're right. But regardless, if you are just trying to trade the highest probability setups and you're looking at a fresh breakout that's happening right now, you don't know what's going to happen, right? Unless you've got all the things going for you with a strong market intraday and the stock strong, blah, 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 blah. Just chill and wait for the breakout to add to those gains. Here's another chart where I just wanted to show where the breakout has held, right? Here's an example for Meta where you have a very long green key bar, meaning the stock opened on its low, closed on or near the high on heavy volume, relative strength. Stock has been in a very nice longer term uptrend, right? I think on this day the market was bullish. Yeah, well, the market was up on that day. Now, that's a breakout that is better. And what are the tells? Well, let's go to the 5-minute chart and see. Actually, wait, what day was this? This was January 10th. Okay, so January 10th, let's scroll back. What were the tells? Well, very, very aggressive climb to start off the day, right? After gapping up off of the low. Okay, it more or less played patty cake at the previous high of the day, so I wouldn't have been super excited about this right away. However, let's take a look at the market on top. Sorry, this was January 10th, yeah. Okay, so right around this level, look at what the market was doing. The market was just kind of pulling back, actually, and this did not pull back at all, and you can see that in the relative strength. And then, well, Meta wasn't really going up when the market started going up, but once the market made this higher low here, then the stock started to gradually grind up. And then you get this long green key bar. And all of these gains here were held. And, well, you had this bullish trend day. And that's great for the case in Meta because the stock had the market tailwind at its back. It wasn't just a choppy, neutral-ish day where, not really anything exciting was happening. So even then, that doesn't mean just assume the breakout's going to hold on a stronger market day because you need to vet the price action in the stock to make sure it has actual legs on the movement, so to speak. And you could see that the next day, Meta tried to sell off. It tested the breakout point here. You can see that. Formed a bullish hammer. Then it climbed again. And then, well, since the market has been selling off a little bit the last couple of days, you can see today Meta went all the way down to the breakout point, but it held those gains. And you can see that in the bullish hammer. Meta is certainly a great looking trade. And once the market finds support, I'm willing to bet that Meta is going to be leading the charge. So, anyways, sorry, this video is probably getting long and I'm kind of losing my voice here talking a lot, but my message to those who are watching this is when you have a breakout intraday, just chill. Don't rush into it. Don't FOMO in. Wait to see what happens. Ideally, you get a close above the resistance level and you add to those gains the next day. Then you have a much better trade because then you have a D1 level that you can lean on, right? What was resistance is now support. And the stock has proven once it can add to those gains that, well, guess what? You got a better looking stock now. You can feel much more confident about. Okay, I am done talking. So I hope this was helpful at all to anyone who's watching this. And yeah, watch your back on those breakouts. You don't know what's going to happen. Just observe. Be patient. Don't FOMO, etc. All right, talk to you guys later.